A very good day to Doctor and my fellow colleagues. We are Group A and will be presenting the financial ratio analysis based on these three companies, which are MISC Berhad, Westport Holdings Berhad, and Bintulu Port Holding. Next, we will look into the company background, which are MISC Berhad, Westport Holdings Berhad, and Bintulu Port Holdings based on its history, activity, and market strength. Next, we proceed to the financial ratio analysis according to the liquidity ratio, profitability ratio, leverage ratio, activity ratio, market ratio, and DuPont analysis based on these three companies. We will be doing the improvement and recommendation after analyzing the data. Next will be the conclusion, which concludes the study that we did. Lastly is the references and appendices. Before I start our discussion, I would like to introduce my team members. I'm Reggie and my team members are Patricia and Ain Safrina. The other team members are Shashmita, Noor Ain Shafika, and Masayu Aina Tatia. Next, I will proceed to company background. We will introduce MISC Berhad, Westport Holdings Berhad, and Bintulu Port Holdings based on its history, activity, and market strength. My partner, who is in Safina, will introduce the MISC Berhad and Westport Holdings Berhad, and I will introduce the Bintulu Port Holdings.
Okay, so for MISC Berhad, their history is Malaysia International Shipping Corporation was founded in 1968 by Robert Walk, and their activity is a diversified global shipping and maritime company, a dynamic, progressive, and innovative global brand that have provided the highest standards of maritime services. And lastly, their market strength is our fleet consists of more than 100 owned and in-chartered vessels with a combined deadweight tonnage capacity of over 13 million tons. And lastly, for Westport Holding Berhad, their history is starting out as Kelang Multi-Terminal Sdn Berhad in 1994 and renamed as Westport Sdn Berhad since 1997 and now known as Westport Malaysia Sdn Berhad. For their activity, they provide fast connectivity in order to transport the products to its consignees, provide storage space and warehousing facilities, and provides bunkering and other ship-related facilities. Last, for their market strength, Westport continues to grow even during times of economic crisis due to its overarching guidance from Tan Sri Kananalingam. Westport has contributed immensely towards Malaysia's economy and will continue to devote itself to that cause.
Now I will continue the introduction for Bintulu Port Holdings. Bintulu Port Holdings, which is positioned halfway between Kuching and Kota Kinabalu along the important intra-Asia trade sea lanes, serve as the import and export gateway for both Sarawak and Brunei, Indonesia, Philippines, Malaysia, East Asian Gulf area. It is currently recognized as one of the largest LNG export terminals in the world. It also serves as both East Malaysia's main gateway for LNG export and its major container port. So for the activities, Bintulu Port is offering management services. Bulking services and port operations are two of its main segments. The port operations are involved in the provision of construction and port services. This includes building port infrastructure, handling cargo for liquefied petroleum gas, liquefied natural gas, dry bulk cargo, containers, and other services. The bulking installation services for palm oil, edible oil, vegetable oil, fat, and other byproducts are the service division. Bintulu Port Sdn Bhd by Port Buckle Sdn Bhd, Samalaju Industrial Port Sdn Bhd are a few of its subsidiaries. At Bintulu Port in Sarawak, Bintulu Port Sdn Bhd is in charge of offering port services. At Samalaju Port in Sarawak, Samalaju Industrial Port Sdn Bhd is engaged in port development and service provision. So based on the market strength, Bintulu Port Holdings Berhad experienced compound earnings per share growth of 0.2% annually during the course of 3 years of share price increase. By contrast, the share price growth of 10% annually surpassed the growth in earnings per share. This suggests that following a few years of growth, the market is now feeling more positive about the stock. It is not unusual for the investors to fall in love with a company following a few years of steady growth. That's all from me. I will pass the floor to the next presenter. Thank you.
A very good day, Abid Doctor. So my name is Nur and Shafika. So today I'll be talking about liquidity ratio. So this is the time series analysis for Bintulu Port Holdings, where we can find the current ratio and quick ratio and cash ratio in 2020, which is 4.25, 4.24 and 2.88 respectively. In 2021, we can find the current ratio is 4.4, the quick ratio is 4.38, and the cash ratio is 2.75. And lastly, the 2022, we can find the current ratio is increasing to 11.78, and the quick ratio is 11.75, and the cash ratio is 6.39. So as we all can conclude here that current ratio is used to identify whether the company has the capacity to fulfill short-term obligations. And we can see here in 2020, they has increased from 4.25 to 4.4 in 2021 and increased to 11.78 in 2022. And for cash ratio is used to evaluate the company's working capital and ability to pay bills on a regular basis. And lastly, quick ratio. The quick ratio will determine the company's capability, excluding inventories, to settle short-term debts with its most liquid assets. And Bintulu Port Holdings quick ratio has rose from 4.24 to 4.38 and 11.75 in 2020, in 2021 and 2022 respectively. So this is the cross-sectional analysis between three companies, which is MISC, Westport and Bintulu Holdings. So we can see here for MISC, in 2022, the current ratio is 1.44, the quick ratio is 1.43, and the cash ratio is 0.81. And for Westport, in 2022, the current ratio is 1.35, the quick ratio is 1.34, and the cash ratio is 0.89. And for Bintulu Holdings, the current ratio is 11.78, the quick ratio is 11.75, and the cash ratio is 6.39. So these are the graph for cross-sectional analysis. We can find that the Westport Holdings has the lowest current ratio, which is 1.35, followed by MISC and Bintulu Port Holdings, which is 1.44 and 11.78. And it shows that MISC and Bintulu Port Holdings have sufficient cash flow to manage their solvency with their short-term liability, as their current ratio is more than 1. So Bintulu Port Holdings also has the highest quick ratio, that stated 11.75. However, for the MISC and Westport Berhad are in critical zone because their cash ratio is below 1, which are 0.81 and 0.89 respectively. And Westport and MISC have to sell their non-current asset to obtain extra funds to settle the current liabilities. And Westport Berhad is also in the danger zone because the company has the lowest current ratio, assets to total assets, which is 15.78% compared to the other two companies. And Bintulu Port Holdings has more current asset ready for sale. Next is activity ratio. So these are the time series analysis for activity ratio for Bintulu Port Holdings, where in 2020, we can find the inventory turnover is 2.27, average collection period is 0.101, average payment period is 0.22, and the total asset turnover is 0.242. And in 2021, we can find the inventory turnover, average collection period, average payment period, and lastly total asset turnover, which are 1.90, 0.078, 0.16, 0.23 respectively. And lastly, for the 2022, the inventory turnover is 0.5, the average collection period is 0.021, the average payment period is 0.034, and lastly the total asset turnover is 0.26. So these are the graph for the time series analysis, where we can conclude that the Bintulu Holdings has the highest inventory turnover in 2020 and the lowest are in 2021, because it mentions that Bintulu Port Holdings is experiencing difficulties with sales and that not all of its inventory is being used. And the receivable turnover is measure of how a company collects its outstanding debts, which is in 2020, Bintulu Port Holdings account receivable turnover was 0.101 in 2022 and it was 0.021. It shows that Bintulu Port Holdings' ineffectiveness on collecting their receivables. And the payable turnover of Bintulu Port Holding dropped from 0.22 in 2020 to 0.16 in 2021 and a rise again to 0.034 in 2022. And this report demonstrates that Bintulu Port Holdings' payment of its supplier and short-term debt is inconsistent. And the ability for a company to make money of its present asset is gauged in part by total asset turnover. The highest score, 0.26, was achieved by Bintulu Port Holding in 2022. So next, we have to conclude the cross-sectional analysis among three companies, which is for MISC, we can find the inventory turnover is 102.75, average collection period is 1.89, average payment period is 1.97, total asset turnover is 0.22, and for Westport, 164.03, the average collection period is 4.18, the average payment period is 4.50, and the total asset turnover is 0.39. And lastly, for Bintulu is 0.5, 0.021, and 0.034, and 0.26. So we can conclude that Westport Berhad holds the highest asset turnover ratio of 0.39, followed by Bintulu Berhad, and MLIC with 0.26 and 0.22 respectively. And a high asset turnover ratio indicates that a business is operating profitability, and it indicates that they are making more money per asset dollar. And Bintulu Port Berhad has the lowest payable ratio, while Westport has the highest average payable ratio, followed by MISC with 4.5 and 1.97 respectively. With a 4.18 payables turnover rate, Westport Holdings Berhad achieved the greatest ratio. Bintulu Port Holding has the lowest, and MISC followed with 1.89 and 0.021 respectively. For the firm, a shorter average collecting period is preferable. It indicates that a customer of his business pay their invoices more quickly. That's all from me. Thank you.
Now I'm going to explain about leverage ratio analysis. The given database comprises financial indicators for Bintulu spanning from 2020 to 2022. The three primary financial metrics encompassed are the debt ratio, debt to equity ratio, and time interest earned rate. The debt ratio shows how much of the company's assets are paid for by debt. It slowly went down from 0.54 in 2020 to 0.44 in 2022, which suggests that people became less dependent on debt during this time. The debt to equity ratios shows how much of the company's money comes from debt compared to owner's equity. It went down from 1.15 in 2020 to 0.77 in 2022, which shows that the capital structure is becoming more fair. There are changes in the time interest earned rate, which shows how well the company can pay its interest bills. It went from 21.07 in 2020 to 23.92 in 2022, which shows that they will be able to meet their interest responsibilities better despite the change. Overall, the trend points to a move towards a more stable and financially viable framework for Bintulu, marked by less reliance on borrowed funds and a better ability to meet interest commitments. The cross-sectional analysis conducted in 2022 among three companies unveils diverse financial conditions as indicated by key variables such as debt ratio, debt to equity ratio, and time interest earned rate. The debt ratio for Bintulu was 0.44 in 2022, which was a bit higher than the 0.39 value for MISC and Westport. From these results, it looks like Bintulu relied on debt funding more than the other two businesses. Bintulu also had the highest debt to equity ratio, which is at 0.77, which means it relied more on debt than on owner's equity. The other company, on the other hand, had smaller ratios, which showed a more balanced capital structure. Bintulu had a much higher time interest earned rate of 23.92, which showed that it could easily cover its interest costs compared to the other company. This result shows that even though Bintulu had a higher debt ratio and a higher debt to asset ratio, it was better able to meet its interest payment obligation than the other two companies in 2022. This study shows that these companies had different ways of managing their money in this year. For example, Bintulu relied more on loans but was able to easily pay its interest bills. On the other hand, the other company had smaller debt ratios and debt to equity ratios, which showed that they were more careful about how they funded their business. Now, I'll continue for the improvement. The first one, the debt ratio for MISC has been steady, but the 2020 negative time interest earn ratio suggests that operating earnings may not be enough to cover the interest cost. To fix this, first we have to improve debt management and identify new ways to produce money to stabilize the finances. Westport declining debt to equity ratio indicates a shift towards an equity-focused financial structure. For this problem, the corporation should also maintain its time interest earn ratio growth to improve its finances. This can be done by focusing on revenue and cost-effective strategies. Next one, Bintulu relies heavily on loan capital despite its declining debt ratios. Improving the debt structure while keeping the money flexible may reduce this dependence. And the last one, all businesses should receive money from multiple sources, monitor industry financial ratio criteria, and link their short-term and long-term financial goals. The strategy, lower risk, compares organizations in the same area and adjust strategies when market conditions change to sustain growth and stability. For the following slides, we will discuss about the profitability ratio analysis. Bintulu Port Holdings from 2020 till 2022, time series research shows its amazing financial performance. Bintulu Port Holdings gross profit margin dropped from 0.78 in 2020 to 0.72 in 2022. The corporation maintained its operating profit margin, which ranged from 0.26 in 2020 to 0.29 in 2022, suggesting operational effectiveness despite reduction. In 2021, the company's EPS rose from 20.28 in 2020 to 78.95, signifying a great year. However, by 2022, EPS dropped to 27.77 but remained higher than the previous year. Different profitability and shareholders' earnings may explain this variation. Bintulu has consistently been profitable, with 2021 earnings rising significantly. This denotes stable performance and occasional greatness. This table shows profitability ratio cross-sectional analysis among three companies in 2022. MISC had a gross profit margin of 0.36 in 2022, suggesting reasonable profitability. Operating profit margin was 0.04, indicating a lower profit margin after operating expenses. The company's EPS was 40.8, indicating a positive trend in shareholders' earnings. On the other hand, Westport had a 1.35 gross profit margin in 2022, showing high profitability. The operating profit margin was 1.8, indicating high operational efficiency. For the year, the company EPS was 20.5, which divided profit among shareholders. For the year, the company's EPS was 20.5, which divided profit among shareholders. They show EPS down from last year. With a gross profit margin of 0.72 in 2022, Bintulu maintained moderate profitability. The operating profit margin rose to 0.29, indicating improved efficiency. At 27.77, the company's EPS was up but down from the previous year, but still decent. This 2022 cross-sectional research shows profitability, operational efficiency, and earnings per share differences between the three organizations or companies. It compares their financial performance for that year. Now, for the improvement part. First one, negotiating supplier contracts, optimizing manufacturing processes, and re-evaluating cost structure may help MISC and Bintulu to stabilize their gross profit margin swings. And also, stabilizing MISC's operating profit margin and Bintulu expense to revenue management could improve their operational efficiency. Second one, EPS growth must be maintained and increased for a long-term profitability and financial stability. Also, MISC's project suggests that diversifying income or entering new markets could improve it. Westport should focus on stable their expansion, whereas Bintulu should eliminate EPS volatility and focus on sustainable profits. Next one, strategic financial planning, risk management, and accurate reporting can boost investor trust and companies' governance. Innovating in operation can raise output, efficiency, and cost saving, such as technology improves company process and performance. The last one, a company strategy that encompasses cost management, profitability, financial planning, risk reduction, governance improvement, adaptability, and technology integration is needed to assure this firm's long-term financial health and viability. This suggestion improves their finances and market resilience. Thank you, that's all from me. I'll pass to the next presenter.
For the following part, we're going to look at the market ratio. The time series analysis specifically for Bintulu Port Holdings, the price earnings ratio stands at 0.656 in 2020, 0.964 in 2021, and 0.604 in 2022. Whereas the market to book ratio stands at 0.787 in 2020, 1.169 in 2021, and 1.203 in 2022. So from the figure that we have calculated just now, what can we derive from those calculations is that in 2020, the PE ratio for Bintulu Port Holdings, which stands at 0.656, means that the company's stock is trading at a lower multiple of its earnings than the market average. So it could indicate that the company's earnings are low or that the stock is undervalued. And in 2021, the PE ratio increases to 0.964, which means that the investors will pay 0.964 cents for every 1 ringgit of its earnings. This could be the result of increased investors' confidence, increased profits, or positive organizational changes. So increased valuations stem from potential investors' optimism regarding the future prospects of the company. In 2022, on the other hand, the PE ratio for Bintulu Port Holdings fell back to 0.604, which may suggest that a more cautious valuation than it did in the previous years. Meanwhile, the market-to-book ratio in 2020 for Bintulu Port Holdings is lower than 1, which indicates that the shares of the company is undervalued. And in 2021 and 2022, the market-to-book ratio is more than 1, which stands at 1.169 and 1.203 respectively. This could indicate that the investors are paying 1.169 ringgit and 1.203 ringgit for each 1 ringgit of the book value of Bintulu Port Holdings shares. Now let's look at the figure we have calculated for all 3 companies. So the price earnings ratio for MISC Berhad stands at 18.58, for Westport Holding is at 18.44, and for Bintulu Port is 0.604. Whereas market to book ratio for MISC Berhad is 0.8333, Westport Holding 1.16, and Bintulu Port is 1.203. So from the comparison that we did just now, MISC Berhad recorded the highest PE ratio of 18.58 compared to Westport Holdings and Bintulu Port in 2022. So a high price to earnings ratio could indicate that investors are optimistic about the company's potential for future profit growth. However, for market to book ratio, Bintulu Port has recorded a ratio of more than 1, as well as Westport Holdings. The greater than 1 ratio suggests that perhaps as a result of optimistic expectations for the company's performance, so the market values of Bintulu Port is higher than its book values. Meanwhile, MISC Berhad has recorded the market to book ratio of less than 1, which indicates that the market is undervaluing the company in comparison to its book value. And this may be a sign of things like reduced growth forecasts, worries about profitability, and etc. Now let's proceed to the time series analysis for Bintulu Port Holdings, specifically for DuPont analysis. So the return on assets in 2020 stands at 3.16%, 11.5% in 2021, and 4.1% in 2022. The return on equity, on the other hand, is 6.77% in 2020, 21.5% in 2021, and 7.3% in 2022. From the calculations that we calculated just now, in 2022, Bintulu Port Holdings ROA stood at 3.16%, which shows that the company's net income was 3.16 cents for every dollar of its assets. Given the size of its assets base at the time, the company's profitability may have been modest, as indicated by the relatively low ROA. In comparison to 2020 and 2021, the ROA increases from 3.15% to 11.5%. So compared to 2020 and 2022, Bintulu Port Holdings is more efficient in using its assets to generate profit in 2021, as evidenced by the highest returns on assets in that year. Now, if we were to compare the ROE for the 3 years, in 2020, Bintulu Port Holdings achieved ROE of 6.77%. This indicates that for every dollar of equity owned by the shareholders, the company generated 6.77 cents in net income. So a lower ROE would indicate a relatively modest profitability in relation to the equity base and could be caused by reduced net income or larger equity base. In 2021, the increase in ROE to 21.5% indicates a noteworthy improvement in Bintulu Port Holdings' profitability relative to its shareholders' equity. So a higher ROE will generally indicate better returns for shareholders in relation to the investors' equity. And in 2022, the decline in ROE to 7.3% indicates that there's a decline in the company's profitability relative to its equity base. Now let's compare the ROA and the ROE for the three companies in 2022. So for the ROA for MIC Berhad stood at 14.3%, for Westport Holding is at 13.2%, and Bintulu Port is at 4.1%. And the ROE for MIC Berhad is 5.34%, Westport Holding 21.4%, and Bintulu Port is at 7.3%. As we can see, MIC Berhad has the highest ROA at 14.3%. Because it has the highest net profit margin of all these companies, MIC Berhad records the highest ROA, while Bintulu Port has the lowest ROA due to its lowest net profit margin. As a result, we can say that MIC Berhad uses its asset to produce sales more effectively as compared to Westport Holding and Bintulu Port, which have ROA of 13.2% and 4.1% respectively. In terms of ROE, on the other hand, Westport Holding has the greatest ROE at 21.4%. This demonstrates that its effectiveness in raising shareholder value and making a profit. So a higher ROE could be a sign of effective asset management, sound financial management, or a competitive edge in the market. In comparison to the other two companies, MIC Berhad may be less effective at using its equity to generate its profit, because it has a lower ROE. So higher ROE is usually preferred by investors because it shows that the equity capital was used effectively. With the ROE of 7.3%, Bintulu Port is in the middle between MIC Berhad and Westport Holdings.
Finally, we can conclude that the financial analysis underscores the unique part of MISC, Westport Holding Berhad, and Bintulu Port Holdings. MISC exhibit positive transformation, which is reflected in the improved earnings per share and growing investor confidence with positive price to earning ratios. Westport Holding Berhad stands out for operational excellence. This is because of the high asset turnover and efficient payables turnover, which indicates strong operational efficiency and creditor trust. The consistent high PE ratio reflects investor optimism about future profit growth. Bintulu Port Holdings excel in liquidity, which is evident in robust current and quick ratios, showcasing adaptability during external challenges like the COVID-19 pandemic. Despite this, challenges in inventory turnover and receivable collection practices raise considerations. Lower PE ratio and undervaluation based on MB ratios suggest industry challenges and lower growth expectation. Continuous monitoring and adaptation are emphasized for all three companies, with MISC facing liquidity challenges, Westport Holding Berhad focusing on short-term financial health, and Bintulu Port Holdings navigating inventory and receivable challenges. Each company's unique financial dynamics underscore the importance of adapting to market conditions for sustained success and stability.